Hi, it's Paul from globaltradingsoftware.com. Quick instructional tutorial video on the oil breakout trade. We did this in our trade room today, and somebody asked, can I make a video just to highlight some of the main key areas for this trade. I personally took 100 ticks on this one because I was more aggressive with the manager, and we'll go through that again in a minute as well. But this is oil coming into today. Today is I lost track of time, we're in August, aren't we? 23rd of August. So during the European lunchtime and beginning of the afternoon, we can see a very range bound period with oil here. This is the 5-minute time frame. So just after the New York gold pit open here, we've got a 6-star buy. But I've got to take into consideration these highs during the European morning, or for those in the US, these are the overnight highs. So we don't want to be going long until we break that. And what we're looking for at the top of the hour at 9 AM EST, we get the oil pit open. Now it's not a physical pit anymore, but that's when a lot more trading starts to happen. And it's this first candle that we're really interested in. This first 5-minute candle. You see how the bottom of the range and the top of the range was in that support and resistance zone that I'd already put on my chart from the overnight. And it's a breakout of this range, either long or short, that we're looking to trade. It is a reasonably big candle, but when you're using micro oil, it's not that big. And we're looking for a breakout. So the entry, my entry was 64.32, which was just above this resistance zone, if you like. So that was my entry here. I'm going to put that in green. Okay, and my stop was just below this low just here, so below this support zone. Big wide stop to begin with, but you need to give it a little bit of room there. So let's just draw that stop in here. So remember, when we're doing the opening range breakout for oil, it's 9 AM EST, and it's the 5-minute time frame. It's that first 5-minute range, and that's for oil. You will do that for oil, and you will do that for gold, and the gold pit open just here as well. For indexes, we use 15 minutes, and for currencies, so your currency futures or your forex, you would use a 10-minute time frame. So they're the best that we use for opening times. And obviously, we do have little indicators that help you identify those opening times and those ranges and things. They are not available for all of the indicators, but I'll put a link in the bottom of this description for those that we have developed it for. It's not a big expense, but what it does is identifies those openings, if you like, for London, for Europe gold pit open, New York gold pit open, New York Stock Exchange. We are going to upgrade it and have the oil pit open in there as well, but you can see that range in there because part of it is the opening range as well, because if it did come down, we'd look for it to find support on that range and go again, but at this moment it's still going long. So this is on the 5-minute time frame. Now with an opening range play, I use the manager on aggressive setting. So on the manager, usually for day trading, we're going to use a moderate to begin with, but this is a breakout type of strategy. So I already start with an aggressive setting on my manager. It's still in, right? But I actually went down to the 3-minute to manage it more. I mean, this thing now is coming up to 200 ticks profit now. And I'll also put the link into our Discord group, and again, you can watch our live trade rooms on this channel, so please subscribe, because I was updating people with this trade even when the trade room had finished, how I was managing it, so they could learn. So again, we're on aggressive. We got a nice move into this. The cyan dots mean that we've got above average volume for each one of those candles. So we are building up momentum as we break out of here, which is fantastic news. The blue dots underneath, when we see these sideways movements, are lower than average volume. The green candles with the manager are accumulation volume, so that has more volume than the previous candles. We're accumulating. There's more buyers in the market. So this is a little warning sign here when we get this little red doji. So that's got more sellers in the market and it's higher than average volume. But that was a one candle wonder. This is where the manager comes in here You ignore the one candle wonder, then we're getting green, 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 all with higher than average volume. Then we're going sideways, just above $65 here. But predominantly, we've got higher than average volume candles that are green, which is accumulation. The down candles are cyan, and they're lower than the previous candle's volume, plus this one has lower than average volume. So we're going sideways and there's no need to panic. Then we start to have a big move up again. If you'd have stayed on the 5 minute here, you'll see what we call a high volume rejection on this hammer candle here, where we come down, we reject the lows on high volume. It's higher than average because the sign's above there, and it's a red candle, so it's got higher than that previous candle. And then the next candle is more important. We get a green candle, accumulation. It's more volume than this high volume rejection, and it has higher volume than average as well. So this thing's going and it's keeping going. And now remember, this entry was at 64.32, and you'll be able to see those screenshots of my micro CL trade in that with the profits already, on there, the live trade in our Discord group. So so this is basically a training video from what I traded live with the guys. Now this is coming up to 200 ticks profit. Some resistance coming up here now as well. But this is how I managed it. I went down to 3 minute aggressive, and I just wanted to lock in 100 ticks, to be honest. We got this red candle here, which was a bit of a warning sign that this could go down, and that's the one that took me out and took my profit. 100 ticks as profit isn't bad. I had 5 contracts on, so $400, not bad for that opening range play. But again, we can learn from this, in that we was already aggressive with the manager. Being too aggressive with that time frame actually got us out too early. So the way oil is moving at the moment, when I trade this again, I will stick on the 5 minute. I'll leave the manager on aggressive, but because I've learned from this now, I will stay on that 5 minute time frame to manage this trade. And that's how oil is reacting right now. Unless something changes and changes my mindset, that's what I'll do until something else happens. So again, very simple strategy. The oil opening range, it's the 5 minute candle. You also need to look left and identify some major support and resistance zones, and usually you'll see oil is in a range during that European session, so that helps. And then you can look to trade out of that opening range, either long or short. For me, with my inner circle, I put the long and the short order on after that first 5 minute candle, because you just don't know what's going to happen. So I both have a long and a short order on, and we had a buy here at 5 at this was my buy order here at 64.32, buy 5 at 64.32, and that's the way it went. So really great trade. I've just put this on paper trading so you don't see my account details, but fantastic trade. This is the chart. The chart looks the same whether it's Ninja Trader, whether it's Think or Swim. We've got opening range trades for those as well. It's a great strategy. You probably get two runners a week on this if you trade this every day. The same with the oil breakout, with the gold breakout, sorry. And the indexes I traded as well. I traded M2K from the London opening range today, which was a great move, great trade. So it's a great little strategy, and hopefully the guys that have asked for this will become helpful for them, so you can trade this range breakout in the future.